presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
This is awesome. Come on, parlez-vous. We're going over to Paris. What's happening?
Hey, Tom, it's Adam from Paris. How are you, sir?
I'm doing great. Adam, yourself?
That's good. Long time no talk. I appreciate everything you've done for me and my family over the years. So,
well, we appreciate you growling a problem with us.
Yeah, sir. I've done gold reports and all the softwares and all your books and read it. Generational thank you.
Thank you so much. Appreciate it.
Yes, sir.
Now, Tom O'Brien.
Welcome, folks. Tommy O'Brien coming to you live from TFNN. We kick things off just after 3 p.m. Eastern Time. Coming into Wednesday trading, and boy, we got a market right now. Reversal. Coming off that 6,000 price point, you have the S&Ps right now, negative by 95 points. We zoom in on the 5-minute, and we are making session lows as I speak. 58.64, down 1.6% on the S&Ps. NASDAQ 100, all of this ensuing at about 1 p.m. Eastern Time. Demand was light for a 20-year auction. Fear in this market right now. The deficit, the debt, it's adding up. You had Moody's out there with a revision. We're going to talk to Sean Edwards from Direction coming up at the after the first break. We'll talk a little bit of that action. On the heels of that, a lagging indicator, Moody's. But boy, how about these yields? We have Congress. We have the Speaker of the House making the push to get that tax cut done and through the House and over to the Senate. And at the same time, we have yields spiking and we have the market pulling back. And yeah, we're at session lows. NASDAQ 100 off about 1.5% right now. You have the Dow off 1.9%. UNH not helping that, down 5.2% as they have more news out there. But you get the Dow off 1.9 and look at the Russell, almost off 3%, off 58 points. 2051. Crude. You see the spike last night in crude on the news that Israel potentially going to strike Iran's nuclear facilities. So much for a pop. Boom, just like that. We're down on crude with a 61 handle at 61.46. Now let's jump to yields. We'll start off with the 10-year. The 10-year. And let's start off with the yield curve. Why not? Okay, we just covered it in the 3 o'clock update, but the 10-year right now, we're pushing 4.6, folks. 4.59, the yield on the 10-year. We're up 11 basis points. The 30-year, one of the biggest stories out there, 5.09. The auction was for 20 years. Okay, demand was light. The 20-year, up 13 basis points. Now, the 20-year, okay, isn't exactly an auction that is always very heavily participated in. You know, and I'm not showing up at those auctions, but that is the consensus. Nonetheless, it was lackluster, and in light of the yields, in light of yields dominating that conversation, quite the day. We got the 10-year right now pushing 4.6. That's your 10-year. Okay, you take a look at the 30-year on the ZB, and I mean, you look at some of these moves, right? You talk about price destruction. How about from where we were anywhere back here in terms of 117 down to 110, right? You look at something like the TLT, okay, the iShares 20-year plus ETF, you're talking about destruction from 100 down to 83 in these markets. Remarkable on the long term as yields are spiking. We're at 5.1%. And look at these markets picking up steam, man. Now, we talk about the S&Ps. We talk a little bit of price and volume, okay? We've been talking about this on the program. You know, you follow technicals, folks, you follow fundamentals, but man, you talk about hitting the mark within 6.5 points. You hit 59.93. We've been talking about this area of sustained selling in early February. Just remarkable. We touched the top of that area. It starts at 6,000. Look at the volume on this chart, okay? It is a remarkable amount of sustained volume. When you look at the fact that we were doing at least 1.9 million shares, that was the lowest day. 1.85 million on the 26th, but realistically, you were doing 2.5 million, right? Some of the biggest days out there. And this was not after Liberation Day, okay? This was leading up to it, of course, on some of the anticipated tariffs that were going into place. But then you look at the volume we're doing right now as we've just faded higher on fumes, right? This market just traded from a price point of 51.27 up to 6,000, okay? And that's taking after Now, there was a lot going on, right? We had, whether it was the 90-day pause on April 9th, huge volume on these lows, but then you're talking about only doing 1.3 million, 954,000, right? The biggest day out there is 1.6 million. We did 2 to 2.5 million for 3 weeks straight, and that's the area we're coming into. So it's going to take some momentum to get through that wall of volume. And what happens on top of that? Now we have yield concerns. With deficit concerns, yield concerns, 30-year 5.1. I mean, 10-year, pushing 4.6, and you're going to talk about how that's going to reverberate. And you see it in the small caps. The small caps, they're always open to duration, okay? As in they are exposed to it, right? Where they are short-term in the duration is what I talk about. They're going to need to roll over that debt. Okay, and they're going to be the ones that are going to have to pay the higher yields that are coming due. Okay, you look at Apple, you look at Microsoft. No, they go out very long on their debt, right? They can raise very long-term debt numbers, basically at Treasury rates, just over it. When you look at that, because Apple making a loan is probably just as reliable as the Treasury at this point, especially. But nonetheless, when you're in the Russell, that's where you're seeing it get hit today. Those companies, the small caps, they don't have the ability to issue that long-term debt like the big tech companies do, okay? They're issuing shorter-term debt that they need to roll over. They're more prone to the volatility that comes with higher yields, and you're seeing the Russell down almost 3% right now. Talk about a move, man. All right, we check out some equities today. Target, some tough numbers pre-market. You spiked down to 90.55. And we're bouncing a bit, but nonetheless, Target, yeah, they miss on earnings, they pull their outlook, and they get some issues, down about 5% for Target. Lowe's started the session higher, but they give it up as well on their numbers. Lowe's down by 2%. You check out the daily on Lowe's. Yeah, nice little pullback. And the Target equity, the Target stock, the chart, that's a rough one, folks. Maybe we've made a base, but boy, we need some strength in this market. Maybe that's the floor. You got some nice volume, but that's the 90-day tariff pause volume. Okay, everything has huge volume at the lows there, and everything, though, is dramatically higher. Target can't even catch a bid from those lows. As we're pushing $93 right now, and you were as low as 87 when the market was falling apart. We jump over the VIX for some volatility premium right now. Back to a daily. And yeah, all things considered, pretty low volatility still in this market. S&P's down 1.5%, but from where we've been since March 26th. And look at that run-up we had when I talked about the volume in late February to March, right? It's interesting. Remember how much volume took place on those charts. I keep harping on it, but man, that is going to be a headwind for equities pushing above that level when you have that type of volume for a sustained level of selling before we really had the exacerbated Liberation Day, market freakout. But equities, we got a little bit of selling and risk off today with the S&Ps off by 1.6% right now. And yeah, we got 45 minutes left in trading. When you get this type of action, 45 minutes, we're going to have a wild finish to this market. We'll see. Down by 1.6%. All right, folks, stay tuned. We're coming back with Sean Edwards, Vice President, Institutional ETF Strategist with Direction. We're going to come back. We're going to talk some equities, some ETFs. Don't go away, folks. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. Welcome back, folks. We got the S&Ps off 99 points, trading at 58.60. Markets in the red. We have yield spiking. Great day to have our man Sean Edwards back on the program. Sean is a vice president, institutional ETF strategist with Direction, and we're going to talk some ETFs. And man, quite a day as usual. Sean Edwards, welcome back to TFNN.
Thank you, Tommy. Thank you for having me back. The last time I was on the show, tariffs were sky high. Our assets were around $40 billion. Now our assets are back up to around $50 billion. I wanted to start there just because we've seen with this latest 90-day tariff pause, there's a risk-on environment. So traders are back in the market and they're looking to trade leverage and inverse ETFs. So definitely thank you for having me back on, and happy to talk through some of those flows that we're seeing within our fund currently.
You know, I love it. And I was thinking, Sean, maybe, we're coming into Memorial Day. Maybe we'll get some calmness, not the action. And a lot of what we're going to talk about, driving some of the action, of course, today. Let's start with just the market, man. We have the market, people, whether they're trading ETFs. You guys have such a great suite of ETFs, but talking big picture, whether you're talking indices, but talk to me about what you guys are seeing. You have 50 billion from 40. My goodness, quite a month. Go for it.
No, absolutely. As I mentioned, risk-on environments for traders. Once we got the news that there's going to be a 90-day pause, leading to that risk-on environment, we've seen fund flows, and in particular, whether you're bullish or bearish, the U.S. or China. Just staying on the topic of the tariffs. Again, it's between the U.S. and China, they agreed to suspend tariffs on goods. So that is ultimately leading to a thawing of trade tensions between two of the world's largest economies. So if you are looking to trade U.S. or China, you can look at trading opportunities with Direction ETFs. And again, just to highlight, we do have leverage ETFs or tactical short-term trading tools that provide daily exposure, enhanced exposure to an underlying index. And I'll just start with SPXL and SPXS. So whether you're bullish or bearish, the S&P 500, you can look at trading SPXL or SPXS. So if you're bullish, you can look at trading SPXL. If you're bearish, you can look at trading SPXS. If you want 2x exposure to the S&P 500, you can look at SPUU. And then just to round out, if you are bearish, the S&P 500, you can look at ticker symbol SPDN. And then moving over to China, broadly speaking, and traded China's volatility, if you want to trade the 50 largest and most liquid Chinese companies, you can look at ticker symbols yin and yang. So again, I mentioned a little bit earlier, seeing our assets, grow roughly $10 billion within the past week. Again, that's to inflows, but also market appreciation. You can look at yin and yang. Yin was one of those beneficiaries. So again, that ticker symbol is YINN, and that gives you exposure to the FTSE China 50 index. So again, if you're bullish, China, and you want to trade the 50 largest and most liquid companies within that particular index, you can look at Yang. And if you're bearish, you can look at ticker symbol Yang, YANG. So give me that same exposure. And just staying in China, you can look at ticker symbol CWEB if you are interested in trading some of the largest internet-related businesses within China. Again, that ticker symbol is CWEB. And then rounding it out, if you want broad China exposure, if you want to trade the largest, most liquid stocks, you can look at trading ticker symbol CHAU. That's Chow. That's the direction daily CSI 300 China A shares Bull 2X ETF. Again, the 300 largest and most liquid stocks in China. So a lot of ticker symbols, as I always say, tactical short-term trading tools. Just giving you ideas if you're looking to trade for trading ideas around tariffs between the U.S. and China and broad U.S. and broad China volatility. You can look at those names.
Pretty cool, man. And I was jumping through those charts, and I appreciate you going through them as you were listing them off. And boy, when you talk about the leveraged S&P ETFs, that SPXL, almost a double bagger from the lows, from 87 to almost 160. You're pulling back today, of course, and even the double from about 100 to 140, up 40% on and I just say just a double, but to be up 40% in a month, my goodness, remarkable accelerations, man. And we know why traders enjoy those vehicles when, my goodness, you're getting that type of action in a 30-day period on something like the S&P 500, where we live in interesting times.
Absolutely.
We were going to talk about Moody's anyway. It just keeps going, man. It's only Wednesday, but this yield story, and boy, I know you guys got TMF, TMV. I was looking forward to talking to these as well as some shorter-term duration ETFs, but I think a lot of traders paying attention to fixed income right now. Let's talk some fixed income, some 20-year Treasury if we can.
No, absolutely, Tommy. And as you mentioned, we saw that Moody's downgraded the U.S. credit rating from AA1 to AAA. And that's just due to rising deficits, higher debt rollover costs, and elevated interest rates. So that's led to increased bond selling, driving yields up above 5%. As we see yields approaching 5%, and if it goes above 5%, you could probably, make the assumption that you'll see more traders navigate away from equities until fixed income as well. But what we're seeing is a contrarian play. So the ticker that you mentioned a little bit earlier, TMF and TMV, that gives you exposure to the ICE Treasury 20-plus year bond index. So one of the beneficiaries of inflows within the past week has been TMF. So again, if you have traders that are bullish bond prices, so if you believe that rates will drop, and on Monday we saw that Atlanta Fed President Boswell stated that he prefers only one rate cut this year as the central bank tries to balance, the upward pressures of inflation and worries of a recession. So if you believe that there is going to be a rate cut, you would look at trading TMF. And so again, you're betting against bullish bond prices and believing that rates will drop. If you're bearish and you think that bond prices will decline but rates will increase, you can look at ticker symbol TMV. So that's the longer end of the curve. As you mentioned, Tommy, we do have some shorter duration products as well. If you want to trade the 7 to 10 year Treasury bond index, you will look at ticker symbol TYO, which is the Bull 3X ETF that gives you exposure to the 7 to 10 year Treasury bond index. Or if you're bearish, you will look at TYD, which gives you 3X daily exposure to the 7 to 10 year Treasury bond index. So again, what we've seen within the past week, contrarian plays, you have traders that are betting against falling rates. So they're trading TMF.
Pretty remarkable moves again on those ETFs. I mean, fixed income, and I was looking at TMV, of course, the one that's been appreciating recently, and you're talking about up almost 30% from where we were 6 weeks ago as you were chopping around from March and April. Just huge moves, man. And then if we could talk a little retail, it's so great. The ETF lineup you guys have. You're a sponsor, I know you are, but I love your products, man. And no matter where you are in this market, you can find some great ETFs. And, I was just talking about Target at the beginning of the show, of course, some weak numbers from Target, retail, Home Depot, Lowe's. But talk to me a little bit about retail, Sean, please.
No, absolutely, Tommy. So, again, retail earnings are underway this week. And we're seeing the impact that tariffs and shifting customer sentiment is having on names like Target, as you mentioned. You see that they reduced their outlook for the year as a result of tariffs and shifting customer sentiment. So we'll see the impact that has on Target, but not only Target, Home Depot, TJ Maxx, Ross, Advanced Auto Parts, Lowe's, BJ's, Williams-Sonoma. These are all retail names that are scheduled to report earnings this week. So if you are interested in trading those retail names in just the broader retail sector and broader consumer discretionary sector, you can look at ticker symbol RETL. As you mentioned, we do have products. So depending on where you are looking, we probably have a product for you. So again, that ticker symbol is RETL. That's the Direction Daily Retail Bull 3X ETF. 3X bull exposure on a daily basis to the movement of the retail sector. And then if you want more exposure to some retail names, but more specifically consumer discretionary sector, you can look at ticker symbol WANT. And that's the Direction Daily Consumer Discretionary Bull 3X ETF. So again, names like Williams-Sonoma and Home Depot within that particular fund. So again, trading ideas. As we know, tariffs are having quite an impact on the retail names, shifting customer sentiment. We see that Target made a note of, customer sentiment impacting their growth projections for the year as well. So if you are looking to trade retail names or consumer discretionary names, you can look at ticker symbol RETL and WANT. Again, short-term tactical trading tools. You definitely want to monitor your trades daily, as they are not meant to be held long-term without actively monitoring your position there.
Daily investment vehicles, folks. That's right. But boy, we got some moves, man. And those stocks, Williams-Sonoma, you talk about some roller coasters, man, during those tariffs. That stock in particular, quite a roller coaster. But I was going through those ETFs. Retail, man. RETL from $10 down to $4 and almost back to $8. Well, Sean, congratulations to you and the team, man. $50 billion from $40. I know you guys have an outstanding lineup of products. I appreciate you coming on the program as always, man. And boy, if that's what we can do in a month, what are we going to be at next month when I tied? No, I appreciate it, man. We look forward to having you back on the program, Sean.
No problem, Tommy. Thanks a lot. Have a good one.
Thanks so much. Folks, check it out. Direction. Head on over to the front page of TFNN.com. You will see that Direction banner right on the front page. Check it out. And yeah, they got quite a lineup of ETFs, folks, no matter what you're trading out there. Great products. And boy, you talk about some moves, right, in this market. You check it out. And right now, we got the S&Ps down by 107 points right now. And boy, you talk about a move, man. And yeah. We got the NASDAQ 100 down 355 right now. You're off 1.6%. And we got the Dow off 884 points. So, folks, head on over the break. Check out that Direction banner. Check out their ETFs. They're a great sponsor. We appreciate their support. I'd be trading them no matter what. And I know I'm biased, but they got some great products, folks. And, man, check it out. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We have the markets in the red. S&P's off by 97. You get the Dow off by 1.9. You're below 42,000. And yeah, UNH not helping the Dow on a bad day as they're down about 6% on stories. Another article coming off that basically they're sending kickbacks to nursing homes. Yeah. How about Google, right? Up by 3.2%. We were talking about them this morning. And there's a lot driving that action. We check out a 5-minute. And yeah, you talk about a run out of the gate, man. So Google, let's see if I can pull it up real quick. Where were we? Forgive me. But they're launching a service, $250 a month for their AI service, premium service on Google Shares. And yeah, I was talking about this morning. $250 is nothing if you get the type of productivity that some of these AI assistants are able to provide. Nonetheless, S&P's off by 96. And yeah, if you check out, folks, I encourage you, head on over to the front page of TFNN. Click on that direction banner, and what's so cool is, okay, you talk about, and Sean and I didn't even get into, because we can't get into everything they got. They got so much going on. They're a great sponsor. We couldn't do what we do without their support, without you out there watching us as well, folks. But the single stock ETFs, just so many. Whether you're trading Apple, I thought of them when they're talking about Palantir and the Tigers Den on YouTube right now. Yeah, they're getting hit today. And there it is. You want even more than that? You want a Palantir Bull 2 times? PLTU. You want a Palantir Bear? PLTD. It's remarkable, right? So if you're a trader, and ETFs are running this industry in terms of finance almost right now, right? But if you're a trader, why would you trade single stocks anymore bullish, right? Because now, if you're a holder, if you're a long-term holder, these are daily investment vehicles. But for you really short-term traders out there, right, why would you trade single-stock ETFs ever again when you can trade the 2 times? It's remarkable in terms of where that industry is going. But nonetheless, we get back to the markets, and yeah, we got higher yields coming at you, man. And we got 2.5 trading days left until we come into Memorial Day weekend, and so much for calmness. as we get the 10-year just chopping around at where we were, diving lower from 1 o'clock until about 1:30 and chopping around since. And yeah, no real huge reaction on the dollar. All right, we are up a bit. The dollar now above 99.60. We were driving down to 99.33 right after that auction, right? So you did catch a little bit of a bid. Jump over to Palantir, PLTR. Yeah, that's a get back, down by 3.7%. You know, it's remarkable. As I had a story, how's Tesla doing today? There was a story on Monday. Oh, look at this, man. Remarkable. Retail traders taking it on the chin. There was a story on Monday that I covered in terms of Monday, right? When the S&Ps opened on Monday and you were opening on the Moody's downgrade, the retail traders were buying up about $4 billion worth of stocks and ETFs. And the two biggest stocks out there were Tesla and Palantir. And both of those are below anywhere traded at on Monday right now. And there's Palantir down to 121 right now, down 3.7%. Target down 5%. Walmart down by 1.3% right now. We jump over to Amazon, down by 1.5%. Yeah, that's basically the NASDAQ 100 right now. Microsoft shares down by a full percentage point. Meta had quite a run and quite a decline. And I know Tesla. Look at that, from that high to low yesterday, down $20 from that double peak yesterday at 355 to 335 on Tesla shares. We jump over to NVIDIA shares. Look at this volatility, man. Remarkable. Yields are going to matter, man. You know, look at that. Poof. NVIDIA just gave up $150 billion in market cap in 2.5 hours on the heels of the 20-year auction. Yeah, VIX gives it up a bit, 20.48. Not bad volatility when you get this type of action, in my opinion. You know what's not getting hit? Bitcoin, and I say that half-heartedly. But Bitcoin, you're right back to where we were this morning. You check out Bitcoin? Yeah, how about all-time highs on the futures for Bitcoin today? 110,000, man. You get it all back. You're above this area, and even on a day like today, Bitcoin can't trade into the red. You're up by almost $1,000, 108,360. Remarkable. We jump over to Ethereum. Not quite the same deal, right? Look at Ethereum. You were trading up at 4,100 after the election. You're trading at 2,500. All right, folks, stay tuned. We're coming back. S&P's off by 1.5 right now. Russell off by 2.6%. We got some market action in the red. And yeah, we're going to have some volume today. We sure are. Because on the S&P, I mean, look at this. We already did more volume than we've done the last 6 days of trading. And we're going to have volume in the final 20 minutes, as is usually the case. Already pushing 1.3 million. We'll be right back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. We got Target shares down by 4.7% on their numbers. And boy, you take a look at Target on a longer-term basis, you know, we're talking about the only thing out there is the tariff low. Okay, the market's well off that number. You get 87.35. Is what we're talking about on that tariff number. And then you go back further than that on a monthly. And yeah, I was talking about this morning. You're talking about back to 2015 prices right now. Okay, and I say right now, what is this? Yeah, this is 2015. 85.81. And that's almost right where we were in April. And you're right back to 93.57. And again, you put that thing on a monthly. Let's put the volume down so we can see a little clarity. Push that up a little bit. And yeah, you're talking about right there. Okay, and we're probably coming back down to test that line yet again. It's right where we had a peak in 2018. It's also where you took off from in COVID. And they got a problem, man. To break down their numbers, so you combine the technicals with the fundamentals, okay? Transactions across their stores were down 2.4%. So that's the number of transactions. So less transactions taking place. You'd say, well, are people spending more? No, they're actually spending less. Yeah. The average amount they're spending down by 1.4%. Now, I remember, okay, as we were coming out of some of the peaks of COVID, transactions were going down, but because we had so much inflation, the revenue was going up. Now what you have is you have less people in the store, and the people that are still in the store are spending, on average, less than they were last year. That's a problem in a big way. They have 35 merchandise categories. 20 of the 35, they lost market share. Do you hear that? 20 of the 35, they lost market share. They got a problem, man. And yeah, of course, we've got to be growing market share in 60, 70, 80% of those categories. That's our focus. Well, that's their focus. They better turn around because that's not what they're doing. They now expect low single-digit decline in sales this fiscal year compared with a previous forecast of possible growth of 1%. I say possible, I'm being kind. Of a net sales growth of 1%. It's a dramatic reversal. I'm surprised they're not down more than they are. Now, you're down from 270, okay, in what, the high of 21. You're down from 178 a year ago. So there's a lot of bad news baked into this equity right now. But that's a tough one. And look at this volume we got in the last couple months. Right? You're talking about both months. March and then April. Both months pushing lower prices. And now we got the earnings that's going to drive this month as well. Now, we're not going to do that type of volume this month, though. We've only done 123 million right now. And yeah, we've got a week and a half left, but realistically, after today, there's only 6 trading days left in the month. That's it, because we got a 3-day weekend, and that's it. 6 trading days left in the month after today. So I doubt we'll do that type of action for 190 million. But nonetheless, Target, they got some issues, man, and we're probably coming back to test at least $85 again. And yeah, you get the high out there from 2018 of about $90.39. And what's going to give this thing a lift, man? The retail sector is hard enough right now. And they get some issues. And I love walking around Target. Don't get me wrong. But you know what? I really don't love doing a lot of shopping in Target. And I do some because I'm there. The experience is far superior to Walmart. But guess what, man? We're price-conscious shoppers right now. Period. And Walmart's down by 1.2% right now. TJX, with their numbers, down by 3%. Now check out this equity. Look at where this equity touched, all right? If you've been following the program, folks, I've talked about the channel. Man, you got to love this, right? This channel, how often we've been talking about this TJX channel. I love my Marshalls, love my TJX for those out you that have been following, right? Look at how we touch it literally to the dot. And that's overnight, okay? But nonetheless, you see how close we are to that range. Yesterday, we were pushing 136, basically touching that upper boundary line. You want to see what that upper boundary line is, folks? There it is. Yeah, you're talking about a channel that's been going on for almost 3 years. Yeah, almost 3 years. And what do? Put it back to a daily. You come up, you touch that line at 137, and boom, just like that. Now, we were getting pretty close on the upside. And this is where, put them on your chart, folks, okay? Especially TJX, we've talked about a lot. If you're thinking about getting into this equity, put this channel on your chart. Maybe you scale in the next time you get a pull back to the bottom side. If you miss it, that's okay. There's always another trade as it goes, right? Now, that's a great stock in an upward channel, and we always talk Mickey D's as well. Mickey D's. You got to go back like 10 years. How about this channel? Yeah, outside of the COVID pullback from 2015, when you started at about 100, and we're pushing 316 right in the middle of its channel line right now for Mickey D's. On the flip side of that, shorter term, I look at a company like McEwen. You're looking to get in some of these equities, right? I'd wait. You pick those channels, they're strong when companies are trading in channels. Higher highs, higher lows as they go. It is pretty remarkable that since April 22nd, we've barely had a red day, right? We had 2 days around May. There's a lot of optimism priced into this market as yields. Now, keep your eye on it. Because we have a lot of recency bias, okay? Let's see if I can go back on the 30 here, I think, right? Yeah, so check this out, right? I've done this before. Do you know why this is perfect? Do you know why this blue line, all right? If you're watching my charts, folks, I got a blue line on the 30-year that's at about 113.20, okay? And I probably put that on the chart when at some point we were trading at 113.20. Maybe we were at the lows of April, okay? 113.20 about. Now, we're at 110.29. We're almost at 111 right now, okay? You go back as far as you can on this chart, and if you go back to basically, right, where? Almost 2000, but really things start to take off on the 2008 financial crisis, okay? Excuse me. And what happens is that when you're above this line, that means higher price, lower yield, right? So if you look at this chart and you go back to 2007, 2008, you look at this chart and you say, my goodness, we got lower price, we got higher yield. How is the market going to handle lower price and higher yield when we haven't even been anywhere near? But you know what happens, folks? The world existed before 2008, and we were doing just fine. And I say that as in, you go back prior to 2007, on most of this chart, going all the way back to 96, okay? Folks, you take this chart back further than that, you run it into the 80s when you see what, the inflation going on during Reagan, when you really had lower price, higher yield, right? Because it was matching inflation, running at 14, 15, 16, higher than that percentage. But what it shows you is there's a potential for higher yields here in a real way, okay? Because you go back, the market was able to handle a lower price. We were down to 104 on the 30-year in 2007, right? We were down to 106. No, we were down to 102 in 2004, okay? We were down to 197 in 2002, right? When we were partying like 2000, where were we? Down to 90. Down to 90. That's 20 points lower, okay? Now, that's on the dot-com bubble. Things are accelerating. But the point is, don't think that because rates have been so low for so long, when they were 0 to negative, that we can't go back to the days when you had real interest rates, real yield, and, you add on to that a tax cut deal that's going to add $5 trillion to the debt in 10 years, and market's saying, yeah, you know what? We're going back to some higher yields right now. Stay tuned, folks. One more segment. Come back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. I'm going to chart a Vista Gold up here. Quite a run the last couple days. And yeah, you're pushing 124. We were at 50 cents on December 17th. And you back this thing up a few years. You're talking about 30, 35 pennies. My dad had their CEO, Fred Ernest, on many times. He believed in this equity a lot on a longer-term basis. It's getting quite an acceleration. For those that held, congrats for sure. And yeah, interestingly enough, folks, my dad's last show that he did, I'm pretty sure that it was an interview with Fred Ernest, wildly enough. I'm pretty sure it was, and that was maybe September 24th. And he passed October 19th, ironically enough, right? Pretty wild. And I think that was the last show. I got to pull it up again, but I'm pretty sure September 24th that was the last show, and he had Fred on. I'm not even sure that Fred is aware of that, but nonetheless, Vista. Now, what I'll say is, man, you're at a 1 to 1.618 expansion, okay? On a shorter term basis, I'm not going to tell you to sell it all or what it is, but you better believe there's a chance for a pullback. When you trade from 50 cents up to $1.24, and you've got the 1 to 1.618 expansion up there, and you back this up on a monthly as far as you go. Okay, now you got $75 up here from 1993, but I imagine there were greater expectations. Don't expect that right now. You're at $1. Okay, 2006, you did get as high as $12 to $14 on that run. But looking at it a little bit shorter term, okay, yeah, I wanted to get these highs. Now, 2016, you got as high as $2, but look at the givebacks on some of these. So just be careful, as in depending on what you have out there, you can always sell half of that, get a free position or something like that, but it's been a heck of a run, and you are bumping into the highs from 2020, the highs from 2021, which is $1.40, and you're at the 1 to 1.618 expansion, but heck of a run with gold. Sitting there at about $3,300. You look at that run for gold as well. All right, folks, thanks so much for tuning in. Have a great evening, safe evening, folks. I'm coming back for the 4 o'clock update, and then I'm out of here. Have a great night, and I'll see you tomorrow morning for the morning market kickoff. Have a great one, folks.